How you doing, everybody? This is Bob Iacchino along with Mike Arnold from Path Trading Partners, and this is a weekend update Path Chat covering the Forex markets for the week beginning May 28th. Tomorrow is Memorial Day. The U.S. markets are, for the most part, closed. All of the FX markets, as always, will be open and running electronically. From Path Trading Partners, Mike and myself, Stafford, we want to wish everyone that served a very happy Memorial Day and a very genuine thank you. Quick week in review. The FTSE 100, the main stock index of the UK, hit record highs. The pound continued its strength. Mike will talk about that in the chart, I'm sure. Government in the UK had moved their terrorist alert level from severe to critical, which is the highest level, and they have since moved it back down to severe, considering that an imminent threat is no longer the case, although again, it's a very elevated state. Global equities continued to rally this week, led by the United States. We got record highs in everything except the Dow Jones for the most part. Although, again, the FTSE really joined into that sort of rally party that we had. U.S. Treasury note remained essentially unchanged, 2.24%. Oil prices fell pretty dramatically, 5% in one day, and then rallied back a little bit. We'll talk about oil a little bit more in the commodity update, but it was based on the idea that OPEC didn't add anything to their previous announcement that they were going to extend production cuts 9 months. They didn't change the amount of cuts so far. We'll see if anything more comes out of that when the Russian government chimes in. U.S. growth was revised up. Second look at first quarter growth in the United States was somewhat bigger than before. The annual year-over-year rate rose up to 1.2% from the initial reading of 0.7%. China's credit rating was cut, first time in 3 decades. Moody's downgraded China's sovereign credit rating, but not by much, and it didn't seem to hurt any of the Chinese figures that we saw. The rhetoric between the EU and the UK over Brexit kind of heated up, with numbers that the UK has to pay to exit being spoken about from the 1 billion to 20 to 40 billion level, and the UK kind of balked at that. The EU actually floated a total exit bill as large as 100 billion euros. And the UK said they owe nothing. So obviously it's going to be somewhere in the middle. The Fed outlined a sort of proposed plan to start to reduce the $2+ trillion balance sheet. Actually, some estimates are calling it a 4.5 trillion balance sheet, but I'm just talking about the newer assets are over 2 trillion. But let's call it 4.5, that's fine. They outlined a plan to shrink that, and they kind of talked about doing it this year, which most analysts had them doing it in 2018. 477 of the S&P 500 companies have reported their earnings for Q1, and we've got an expected increase of 15.3% compared with Q1 of 2016 on the earnings side of the ledger. Stripping out the energy sector, earnings are expected to rise 11%. Revenue growth is seen up 7.3% versus a year ago and up 5.3% ex energy. G7 meeting happened with no real news coming out of it except that Donald Trump said he's going to decide on the Paris Accords sometime next week, but otherwise nothing major. U.S. signed a $110 billion weapons deal with Saudi Arabia, aligning the U.S. pretty securely with the Sunni Arabs over the Shia Arabs. We'll see what happens with that. But that was the eventful news week. There was a lot of silliness in the headlines about President Trump pushing the Prime Minister of Montenegro and complimenting the Egyptian Prime Minister's shoes and all that stupid stuff that doesn't matter for us in the markets. In the week ahead, nothing going on really on Sunday, May 28th, but Monday, May 29th, the U.S. is closed. It is Memorial Day. But we do have an 8 a.m. speech by Mario Draghi at the European Parliament at their Economic Committee. So we'll be looking at headlines out of that in terms of FX movement. Then 6:30 in the evening, we've got Japanese jobless rate, household spending year over year, retail trade year over year, and large retailer sales. Those last two numbers coming out at 6:50, the first two coming out at 6:30 Central Time. And then we've got Australian building permits, or building approvals rather, year over year, and that'll be coming out at 8:30 Central Time. Tuesday, May 30th, we get started with real work here again in the U.S. 1:45 in the morning, French gross domestic product year over year expected to be at 0.8 versus 0.8 last. German consumer price index has come out at 7 a.m. Central Time. The year over year number expected to be at 1.6 versus 2% last. Month over month expected to be down 0.1% versus unchanged last. Half an hour later, 7:30 Central Time, Canadian industrial product prices month over month for April. Same time, U.S. personal income, personal spending, real personal spending, personal consumption expenditures core, and then the real meat in the set of numbers, personal consumption expenditures core year over year. That last one expected to be up 1.5% versus 1.6% last. That's really what we'll be looking at, although there'll be a side eye going to personal income and personal spending, both expected up 0.4%. Income was up 0.2% last and unchanged on the spending side last. Getting into the 8 o'clock hour in the U.S., 8 o'clock Central Time, Case-Shiller Composite 20-year, year over year, and the Home Price Index year over year for March. The 20-year composite expected to be up 5.6% versus 5.9% last, and the Home Price Index year over year expected to be unchanged at 5.8%. Hour later, 9 Central Time, U.S. consumer confidence for May expected at 120. It was 120.3 last. Getting to the 6 p.m. hour Central Time, we've got GfK consumer survey for the UK for May expected to be down 8 points versus down 7 points last. 6:50 p.m. Central Time, Japanese industrial production year over year expected at 6% versus 3%. Versus up 3.5% last. And then coming into, again, 8 p.m., Chinese manufacturing PMI and non-manufacturing PMI. Obviously, we'll be paying much more attention to the manufacturing PMI, which is expected to register at 51 versus 51.2 last. Moving on to Wednesday, May 31st. At midnight, Japanese housing starts and Japanese construction orders year over year. Housing starts expected to be down 1.5% versus up 0.2 last. We've got a small business confidence index. It's a minor number. Then at 1 a.m., German retail sales year over year expected up 2.2% versus 2.3% last. And then we've got the German unemployment change and unemployment rate. The unemployment change for May expected to be down 14,000, and the unemployment rate is supposed to register at 5.7 versus 5.8 last. Those will come out at 5 minutes to 3 in the morning Central Time in the U.S. About 35 minutes later, we've got the UK mortgage approvals and the consumer credit figures. Really expected to be unchanged for the most part, 1.5 billion versus 1.6 on consumer credit, 66,000 versus 66.8 thousand on mortgage approvals. Then at 4 a.m. Central Time, Eurozone consumer price index year over year and core year over year. Price index expected to be at 1.5% up versus 1.9% last, and the core year over year expected to be up 1% versus up 1.2% last. We've also got the Eurozone unemployment rate at the same time for April, expected to come out at 9.4% versus 9.5% last. 7:30 in the morning Central Time, Canadian GDP, month over month and year over year for March. Month over month expected to show 3% versus 2.5% last. And the annualized gross domestic product expected to be at 4.3% versus 2.6% last. Pretty strong jumps on both of those. 8:45 Central and then 9 Central. Chicago Purchasing Managers Index in the U.S. for May expected at 57% versus 58.3 last. And U.S. dollar pending home sales year over year, we don't have an estimate on that. 12:30 Central Time, Mexican Central Bank releases their inflation report. That is a detailed report with no numerical estimates shown on it. And then about a half an hour later, U.S. Federal Reserve releases its beige book. So two sort of complementary reports in this hemisphere on inflation and growth from the two central banks. 6:50 in the evening, Japanese capital spending expected to be up 3.9% versus up 3.8% last. And then at 8:45 Central Time, we've got Japan's Keishin PMI manufacturing number for May expected to register at 50.2 versus 50.3 last. Going into Thursday, first day of June, Swiss gross domestic product, month over month and year over year, which is the one we care about, expected to register at 1.3% versus 0.6% last. Later in the morning, 15 minutes later, 1 a.m., we've got the UK's nationwide house prices index year over year, expected to be up 2.4% versus 2.4% last. Versus 2.6% last. 3 in the morning, Italian gross domestic product year over year. It's first quarter final, expected to be unchanged at 0.8. 3:30 in the morning Central Time, UK's PMI manufacturing from market for May, 56.5 is the estimate, 57.3 is last. Then at 7:15, we've got ADP employment change for May, expected to come out at 180,000 to the plus side versus 177 last. Then we've got U.S. initial jobless claims, expected at 238, 234 last. Now the third week in a row where the actual has been lower than the expectation. And continuing claims for May, expected at 1.92 million versus 1.923 million last. 8:30 in the morning, Canadian manufacturing index for May, last was 55.9. Then 9 a.m., Mexican Central Bank monetary policy minutes for the May meeting. Again, you don't have any estimates on that because we're going to be looking for statements out of that report. Then at 9, we've got the ISM manufacturing figures for May. Expectation of a reading of 54.6 versus 54.8 last. We also have the prices paid part of that, which we'll be watching. Expected to read at 67 versus 68.5 last. Construction spending, this is all at 9 a.m. Month over month for April, expected to be up 0.5 versus down 0.2 last. Then we've got the DOE crude inventories, the EIA figures for the week of May 26th. No estimate ever on that. That estimate comes out later in the week. 6:50 p.m. Central Time, Japanese monetary base year over year and monetary base end of period. And then at 8 p.m., new home sales month over month for April in Australia. Then finally, Friday, June 2nd, midnight, Japanese Consumer Confidence Index expected to be slightly up at 43.5 versus 43.2 last. 3:30 in the morning, UK construction PMI for May, expected to a reading of 52.6 versus 53.1 last. And then the big one for this month and every month, US change in non-farm payrolls for May. The median expectation now is for 185,000 new jobs to be added versus 211 last. And the unemployment rate expected to be unchanged at 4.4%. We are expecting a slight uptick in average hourly earnings and an unchanged reading in weekly hours worked. Average hourly earnings year over year should be 2.6 versus 2.5. And again, the average weekly hours, if it were unchanged, would come in at 34.4. And last but certainly not least for commodities trader, 19th straight week of rig count rises last week. Rig counts rose by only 2, but it was still a rise, and it was the 19th straight week, however modest it was. And at noon, we'll see if it's 20 weeks in a row when the new Baker Hughes rig count report comes out. That's it for the week in review and the week in preview. Let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. Euro US dollar pulled back on Friday. 111.60, first area of support where it pulled back to just below the 8. So Monday, watch for the 111.60 first level support, 111.52 next level. Then we don't have any key support levels till the 111.07 area. So that's going to be a very key level for you to watch. And if that's broken, 110.93, next level below that. On a rally back up, resistance coming in at 112.14, followed by a significant level at 112.36. Then we're looking to retest the defining point on this short trend line at 112.50. Then if we get above there, about 112.55, then a retest of recent highs, 112.68. Switching over to the pound US dollar, Big down move on Friday, dipping slightly below this key area, coming in about 127.92 to 127.83, that little cluster and the 50, but closing back above it. Now, it did close below this trend line, but we do not have a clear path, so there's no trade triggered by that. What we'll be watching for on another push down Sunday and Monday. Sunday night, Monday, we'll be watching for 127.75 first level. Then we'll be watching for the 127.56. Then nothing until we get down to the 127.06 to 126.95 key area. Rally back up, minor resistance coming in at 128.13. And then we'll be looking for right around the 128.44 and then the 128.77. On a bigger move up, we'll be watching for 129.13 area than the 129.30. Switching over to the US dollar, Japanese yen. Found some support down by the 110.92 significant level. So that's going to be your first major support. You might have minor support right around this 111.26 cluster. So if we head lower on Sunday and Monday, that 111.26 to 31 area is going to be key. 110.92. Then we're looking at 110.75. If that is broken, 110.47 followed by 110.23. Rally back up. It's going to be some minor resistance at 111.65. Pretty major resistance 111.75, and then we'd be looking for 112 to 112.03. If we get through that, the 112.30 level will be key. US dollar Swiss. Been in consolidation for about a week now, trading between about the 96, 94 key area and finding some significant resistance right around the 97.65 area. Poked through there once but dropped back. Have not got closes outside those areas. So on a move lower on Sunday and Monday, this 96.94 area is going to be key. Then 96.91. If we get below that 96.79, then we don't have anything down until 96.40 Gann level projection. On a rally up, 97.63 is going to be first level of resistance. Then we're going to watch to retest this 97.76 area, which is the peak of this potential double bottom. If we get a close above that, we're going to be watching for two targets on that. 98.40 and 98.61 are our two targets. It is going against our rotation zone, so a slightly lower probability. In front of that, though, if we do rally up, you're going to possibly find some resistance right around 97.93 and then 98.19. Aussie US dollar. Got below our trend line into clear path. The full target on that would be 74.13, which was not hit yet, and we rallied back. On a move lower in the Aussie US dollar, 74.34 first key level of support, followed by Friday's lows 74.22. Then we'll be looking for that 74.13, and if that's broken, we'll be watching for about 74 level. Rally back up. The 74.55 is going to be first level resistance, followed by the 74.61 and then the 74.67. If all that is broken, we could see a return to the 74.86 area, then followed by the 74.93. US dollar, Canadian dollar. Went higher on Thursday, back down on Friday, found some resistance near our declining 8, coming in about 134.99 or the 135 level. On a rally back up, 134.81 is going to be first, followed by 135, followed by 135.08, then 135.18, and then a potential move all the way up if we get through all those levels to 135.40. Pull if we head lower, 134.37 is going to be the first key level of support. Next major area is going to be 134.09. Then we will be watching for the 133.81 followed by the 133.69 cluster area. Once all that is broken, the next major target down is the 200, which is 133.45. Finally, over to US dollar Mexican peso. On a continued rally we had an inside day on Friday, but on a continued rally, we're watching for 1854.72 first level resistance, followed by 1857.86, then 1859.45, and then if all that's broken, 1864.34. If we head lower, key areas to watch for: 1843.83 for support, followed by 1841.67, and we don't have anything down until the 1833.94. That's all we have for you. Hope everyone is having a great weekend. Talk to you later. Back to you, Bob.
Thanks, everybody, for watching. Thank you, Michael, for that analysis. And there is a new Money Path podcast out. If you want to check it out, you can find it on Google Play. You can find it in your iTunes store. And you can also find it at pathtradingpartners.com. Hit like and subscribe if you like what we're doing. And we will talk to you in the next Path Chat. Cheers, everyone.